A whole lot of shaking going on here in the markets today. Into the green we go, but just barely. Dave Bartosiak with Dave's Daily Dive here. This is what we're going to do. Same thing we do every day. I'm going to dig through some macro charts on a day where S&P was flat. I think we gained 132, let's call it 6 bips on the S&P, 3 bips on the Dow, but 39 bips on the NASDAQ, so that was good. So we're going to take a look at that and some other things. And then, just to not leave you hanging, I'm going to give you 5 Zacks Rank #1 strong buy stocks that are breaking out to the upside right now. So give you a trade idea and go from there. So first and foremost, let's kick it off with the S&P 500. I got my fibs from the November lows to the early March high. You guys have seen this before, this sort of channel that I drew, and the S&P gapped up through that channel. Nice little rally, but then today kind of stalled around break even. Yesterday sort of stalled around break even. We are stalling just shy of the all-time highs. So is it a little worrisome? I'm not too worried. Broke out here. Plus, you have leaders in the higher beta indexes. Speaking of those higher beta indices, how about that NASDAQ? Nice move higher on the NASDAQ. Broke through all-time highs, and today still not looking back. And let me tell you something. Tomorrow, it's not going to look back either because of a little stock known as Amazon. Now, I noted in Amazon when I was looking at an individual chart that there was actually a little bit of bearish, that's right folks, bearish divergence when you're looking at the Chaikin money flow. So what I mean by this is you had values in the money flow going in the negative direction while the market was pushing Amazon shares higher. Actually, to prove my point, I'll go all the way back to where sort of this divergence started, and we can make this look a lot nicer too on Amazon here on the money flow there. So you see sort of this is going one way, this is going another. So buying power is sort of leaving as shares are still kind of coming up towards the top here. But in after hours, these guys are at 950. So a nice little boost there. We'll see what happens during tomorrow's trading day, if it gives back any of that or whatever, what have you. But I thought that was something that you would like to know, especially when we're talking about the NASDAQ here. So we are focused on the NASDAQ, looking for really, I mean, just another all-time high. And that's what it does. And now tomorrow, with one of the FANG stocks, that's right, Facebook, Amazon, Netflix, Google, doing well. This should do well. Speaking of Google, Google did well also. It looks like they're going to be up tomorrow when we kick off things. So there's that. Checking in real quickly with the Russell. This is the small cap index, and you'll note that today it retreated a little bit, but again, in the grand scheme of things, absolutely nothing. Plus, same sort of situation here, where you had this sort of downward channel happening, which broke. We broke through the top of that. So I was telling people, don't wait for a breakout from the all-time highs here, because the real breakout's just going to happen here, and we're off to the races. So that's kind of what we saw. Still in the green overall for the week, of course. Gave back a little bit today, but not too much, not too troubling. Should be all right. Want to touch briefly on the VIX, of course. Got to check in with the VIX. And today, volatility down again. So here we are, 1036 on the VIX. Just no volatility in sight. And obviously that huge gap down over the weekend, because a couple of major risks are off the table. The largest of which was the Le Pen, well, the French election and the odds of Marine Le Pen getting voted in, basically, right? So everybody was worried about that because she was a very isolationist character. She's going to be in the runoff, but She's down 25 points right now in the polls, so they're not too worried about it. But look at the move in the euro as a result. Big gap up right after the weekend. But shares here also have stalled a little bit. Not shares, but you know, the currency here has stalled a little bit. How does that correlate to some of the other currencies? Is this a greenback thing or US dollar overall? A little bit of strength here for the dollar again against the yen, but the yen trade could be stalling out as well. Or are we going to run up? Now, you guys know I like to draw the fibs. Big fan of the fibs, and especially when you're dealing with currencies, you want to use your Fibonacci retracement levels to get some ideas as to where these might end up and start off. So again, it pulls back sort of the 61.8 of the move from the election day lows to the December highs, pulls back, and now we're just shy of the 50-day moving average here on the dollar versus the euro. 50 days at 111.81, and we are at 111.25 right now. So something to keep an eye on. Definitely the euro, because that's had a big impact also on gold. So if you're trading any gold miners, it's been a little bit frustrating over the course of the last couple of days as gold prices have come down off of the highs a little bit. It's been a little bit frustrating. And again, draw your fibs. It's all about the fibs, folks. Or we can even just draw it from this little spike. This intraday spike is probably more accurate. You see a pullback to the 76.4. Had support here. Boom. So next stop, next level of support looks like 12.55, which is about 11 bucks off. That is an area that you've seen a lot of action before. If you look in October, gold took a lot of time bouncing around that area. And then you also had sort of intraday spike down there. Actually, a couple days in June of 2016 provided some support. So that's kind of the overall sort of game plan you're looking at here. But if you look at trend on gold, it is still in the bullish direction, coming off of that sharp sort of downside move there. Okay. All right. So that's kind of the macro picture that we're looking at. The stage is set. So why don't we take a look at 5? That's right. 5 Zacks Rank #1 strong buy stocks that are of interest. The first, Apollo Commercial Real Estate Finance, ticker ARI. Now I'm going to move my indicators a little bit so you can see my money flow down here. So obviously very positive as the stock has built up and gone stronger. Looks like a gap up here. A little bit of a pullback from that gap. Gaps do have a tendency to get filled, my friends. So I think if I'm looking at this, even though it is the Zacks Rank #1 strong buy, have this really sharp down day today. Not sure what that means. So it's a couple things. You can either sort of buy here and put a stop within the gap short, or you can wait for the gap to get filled and then go ahead and load the boat at 19, right? So a little bit of patience is going to do you right on this. I think you just kind of take it easy, a day or two, see what happens. That's Apollo Commercial Real Estate, ticker ARI. Next one, East West Bancorp. So they're obviously a bank. And regional bank, I think, over on the West Coast for the most part, even though they are called East West Bancorp. So they've approached a new 52-week high and then shied off of it a little bit, right? Not a fierce retracement, but just a little bit, just enough to not really break on through with conviction, right? But they did tick a little bit higher. So what I'd be looking for is some support here, possibly 51s, or maybe they even find it at this moving average, a 50-day moving average at 53.12. I don't know if that's going to happen. Right now, this moving average has a horizontal slope pretty much, so it's not much of an uptrend that it's screaming right now. Little overbought on the commodity channel index. I'd be waiting for that to come down to the 0 line and then entering on East West Bancorp. Now I have another bank, ticker HDB. Now remember, these are Zacks Rank #1 strong buy stocks. This is called HDFC Bank. Now they do banking in India, Hong Kong, Dubai, so in Asia. And this has been a stock that's rallied sharply off the lows in January, down at 59 and change, leapfrogged the 50-day moving average, and has continued to be in an uptrend. A little bit of resistance here. They fought through that resistance and keep on going higher. Money flows have stayed positive for the most part since mid-November, so that's all good. A little bit of weakness here, but it looks like that money flow is coming back there a little bit. So it's been in a slow but steady sort of uptrend here. This is something you could take a peek at after, and then just put your stop, you know, kind of shy of the 50-day moving average down here at 74. So $6 stop sounds like a lot, but when you're talking about an $80 stock, 7.5%, it's not that bad, not that far away. Okay, so that's HDB. Then I've got another sort of REIT for us. This is Monmouth Real Estate Investment Corp. So these guys manage and lease properties to investment-grade tenants on long-term leases. Okay, so you can think of this as, you know, the person who owns the land where Walgreens is, right? Or they own the building and they're leasing it, kind of triple net lease option back to them. So you don't really have the credit risk associated with some of the other players. Now, this is still going to be interest rate sensitive, so it's really interesting to see that this stock has moved the way it's moved, but that's probably because interest rates have done what interest rates have done, and that's actually come down a little bit, surprisingly, even as the Fed has raised rates. But these guys ticking up at this new 52-week high. While you do have positive money flows, commodity channel index is overbought for sure. But these guys could be making a move, breaking on towards the next level. Look at what they did here. This is a stock that's gone from 9 all the way to 15. So perhaps there's another round of buying here for Monmouth Real Estate Investment Corp. And again, remember, these are Zacks Rank #1 strong buy stocks. So that means earnings estimates have been moving in a positive direction. So that could be supplying some tailwinds here for Monmouth Real Estate Investment Corp. And the last one, but certainly not least, this is Ormat Tech. So these guys do geothermal and recovered energy power business worldwide. Very interesting sort of alternative energy sort of play. See the sharp move here into March, really, and then since then, I like this little pattern that's starting to develop in here. This is something we've seen a lot of, where you have sort of a harsher kind of top that the stock is struggling to get out of, but you do have a series of higher lows that's coming in. That sort of wedge pattern has been something I've seen across multiple indexes here in this market, and something that I do like to see. So a little uptick on the wick there today, even over the last couple of days. So let me zoom in here. The last couple of days, you got this failure up here. That's not the most bullish thing on earth. Today it looks like an inside candle here, so this could be running out of steam and about to come down, so keep a little eye on this. I think the best way to play this is a breakout above 60. You could buy it, or you wait for a retracement to the 50-day moving average right around 52 or 57 rather, 57.45, 57.50, something like that. Provide you a much safer entry into Zacks Rank #1 strong buy Ormat Tech. All right, so if you want to hear more about this and my zany stock antics, at Bartosiastics, BARTOSIASTICS. That's all I got for you for Dave's Daily Dive, and I will see you folks here on Zacks.com again tomorrow. Have a good one.